This video is to help you prepare for the pro forma model. Our presentation's about a month out, so the first thing we need to do is pull a 10K. I strongly recommend that you pull a PDF version of this, and almost always the best source of that is the company's website. If you look under investor materials or SEC filings, it should probably jump out at you. If you have that 10K as a PDF, then you can save it to a laptop to take somewhere and work on in a coffee shop or something. You can search it, you can print individual pages and know how they'll turn out. So I strongly prefer that PDF format. If you cannot find a PDF format, then you can always go to Edgar and search the website and pull it up there. And we'll do that to get the financial statements. But first, let's talk about the information we're looking for in a bigger picture. Let's try one like Yeti. If I go to Yeti's website, Yeti does such a good job of marketing that their corporate website doesn't come up. So if I go to Yeti Investor Relations, can't even spell it, but with Google I don't have to. And I can usually find a link that says SEC filings, and might even get lucky and find a recent 10K on there. They filed their 10K on February the 18th, so it's relatively fresh. Now here we can pull a PDF and other formats, including an XLS. I like the PDF for the entire 10K because one of our big uses of this will be to search it for certain terms. And so if I open that in Acrobat and save it, then I'll have the entire 10K. You'll know you have the 10K if it says United States Securities and Exchange Commission Form 10K. And then you'll see the name of the company and some other identifying information like trading symbols. If you go to About page 3, you'll see a table of contents. And there are two parts we care about in this course. There's item 7, which is Management Discussion and Analysis, or MD&A. And that is where management gets to tell their own story. And then in item 8, you will see financial statements and supplementary data. That's where we'll pull our income statement, balance sheet, cash flow statement, and also see the notes to the financial statements. So item 7 and item 8 are all that we will use in this course out of the 10K, but they are important. Let's go to the financial statements, and you'll almost always see at least 7 things. You'll see a report of independent registered public accounting firm. We're going to trust that they passed their audit and we don't need to read that or anything. You should see balance sheets, which is self-explanatory. Consolidated statement of operations, which this is the biggest confusion for students at this stage. That's actually your income statement. Don't be misled by the consolidated statement of comprehensive income. That is not the income statement. That's what gets us from net income to comprehensive income. More on that later. There is a statement of equity, which you could use if you were trying to build the most robust model possible. That talks about changes in equity accounts on the balance sheet, but it's a little bit out of scope of this course. And then the third one that we do need for this course is, of course, the consolidated statement of cash flows. Now, these are not necessarily named exactly like this, so what I did is went to everyone who's submitted so far to see what their statements were named. And before I leave this sheet, there's also the notes to the consolidated financial statements. And that's very important if we're looking for things like a breakdown on net interest or a breakdown of how they got to net fixed assets, then we'll find that in the notes. First, let me show you what I found about the different ways that different companies name these 7 things. I took a look at 9 companies that people have submitted so far on their 10Ks. And what I found was that the report of independent registered public accounting firm was virtually called the same thing in everyone's 10K item 2 part 8. The income statement was never called an income statement, nor did it really ever have the word income in it, except for this outlier. It was usually called a consolidated statement of operations, although Apache swapped the order of a couple of words in there. That is your income statement. Phillips 66 actually did call it a consolidated statement of income. That's what we need for the income statement. You'll know you have it right if you have something about revenue minus expenses equals net income. That's an income statement. Don't be misled by the consolidated statement of comprehensive income. This gets us from net income, makes 4 adjustments, including foreign currency translation adjustments, pension and post-retirement benefit plan adjustments, unrealized gain or losses on derivative instruments, and unrealized gain or losses on certain investments in debt securities to get us to comprehensive income. Completely out of the scope of this course, but I point that out because if you're beginning with net income and ending with comprehensive income, then you have been misled into thinking that the consolidated statement of comprehensive income is your income statement. It is not. Revenue minus expenses equals net income is your income statement, and it's probably called consolidated statement of operations or something similar. When we get to the consolidated statement of cash flows, virtually every company called it the same thing. Again, Apache is swapping the order of a couple of words on us. The balance sheet is almost always easy to figure out. Only one company made this a little confusing. Target calls it a consolidated statement of financial position. Everyone else calls it a consolidated balance sheet. But you'll know that you have the right thing if you have total assets with a reasonably large number that's equal to total liabilities and maybe stockholders or shareholders' equity. And if this line matches this line and has names like assets and liabilities and equity, you'll know you have the balance sheet. The last statement is the consolidated statement of shareholder equity, and this shows last year's equity by account. And those accounts could be things like common stock, additional paid-in capital, retained earnings, treasury stock, or other comprehensive income. And for each account, we'll show how we got from last year's equity by account to this year's equity by account. If you see something like that, you'll know that you're looking at a consolidated statement of shareholder equity and that it's out of the scope of this course. And it looks like every company except Target had the word equity in their title. Target called it a consolidated statement of shareholders' investment. So the naming may not be consistent, but the presence of each of these 7 items will be. So if you're having a hard time finding the correct statements, maybe the process of elimination will help you. I think on the notes to the consolidated financial statements, all the names were extremely similar. So again, we care about 3. The income statement with these items, the consolidated statement of cash flows, which by the way has operating cash flow, investing cash flow, and financing cash flow. And it should always end with an ending cash balance, which, as you know from the last test, you just plug into the balance sheet in our models. And then the third is the balance sheet with total assets and liabilities. You'll almost definitely need the notes to the consolidated financial statements. You can search those for things like interest or depreciation. So back to the 10K, if we want to know what that consolidated statement of operations should look like, let's follow the hyperlink to that. And we see that it does begin with some kind of revenue, in this case sales, and then subtracts off some expenses and gets us to a net income. Almost all the income statements will also divide that by the share count to show basic and diluted net income per share. It might even have the share count on it. Now we could try to recreate this in Excel by typing it or maybe even trying to copy paste, but a much better way to do it would be to go to Edgar. So if you search SEC Edgar, then you should find something that looks like this, where you can go to company filings and search for a company name or a ticker and find their filings. If you would like to narrow that down to just 10Ks, put in a filing type of 10K, and we'll see that they filed in 20 and in 19. And so if we need interactive data for this company, Then we can click on that, view in an Excel document, open that Excel document, and see that we have a file with a lot of different tabs on it. Now it's tempting to come here first and say, oh, well, that must be my balance sheet, or maybe that's my balance sheet. But if you've gone to the 10K first and you've looked at the balance sheet and you know what you're expecting, for example, total assets of 629 and 514, and total liabilities and equity that matches, then when you come to the Excel file, you'll see this is not my balance sheet. This is a parenthetical version, but maybe this is. It's got the 629 and the 514 for both total assets and total liabilities and equities. So we're going to want that. I'm going to right click and say tab color yellow. So we know we want that one. And if we look around and find some others that match, here are net sales that begin, we don't care about these 3 months, but 12 months ending 19, 18, and 17. So net sales of 913 and a net income of 50.4. See if we can find that on this income statement. Net sales of 913 and net income of 50.4. I'm confident that that's the right statement. And then the consolidated statement of cash flows that begins with net income to find cash flows from operating activities, cash flow from investing activities, and cash flow from financing activities, and ends up with that ending cash balance that we talked about. We can plug back up to the balance sheet, and I'm pretty sure that's the third one that we're looking for. So let's color that yellow. Now we could do these one at a time. We could say right click, move or copy, but what I'd rather do to save time is click the first one, hold down Control key to get the second and the third, and then right click, move or copy. And let's move these to a new book, but instead of taking them out of this book, let's leave a copy here by checking that box. And now we have our workbook with the 3 statements. So we're going to rename per the instructions and reorder per the instructions. And now we have something to begin our pro forma model with. We didn't have to do as much work formatting as if we tried to pull these out of a PDF file. Now these quarterly numbers are nice. If we had more time in this class, we'd do quarterly data, but we don't. So I'm going to delete those columns. Control minus is the key for that. And I'm left with 12 months ending 19, 18, and 17. To get these in the order that we need them for class, I mean, we could just click here and move things around and delete some other stuff, but let's learn how to do this. Let's highlight the entire range, do a data sort. And instead of sorting up and down, let's sort left to right based on row 2 from A to Z, Z to A rather, and that gets us 2017, 2018, 2019. Now we're in a format where we can come along and restate this in the template that our model will be based on. Just to be complete, I'll go ahead and do the same thing on the balance sheet. This time I'm just going to cut the entire column and do a Control-Shift-Plus to insert it here. And this time I will sort again with the Alt-DS. And now all we need to do is go back and get an extra year of data for this statement, 2 more years of data for this statement, and an extra year of data for this statement. And what we're going to find out is Yeti has not been public long enough to have 2 more years, but that's okay. If your company does have 2 more years, when you are on the Edgar website, you should be able to filter the results by 10K and see all the 10Ks that they've ever filed. But for the purposes of your assignment, if you don't have a full 4 years of data available, then let me know, confirm. Maybe it would be good to screenshot this for me, but let me know that that's the case, and then we'll just deal with what we have. So in this case, we just need to go back and get one more filing. We'll open it in Excel as well. Find the 3 statements that we need. And export them to the other book. So I have the older data in green now. I'm going to arrange it by date as before. And now I'm going to bring in the new data. This is a merged cell that is taking up A1 and A2 together and is going to cause me some problems, so I'm just going to clear all with Alt EAA. Now notice when I place these 2 income statements side by side, net sales matches, cost of goods sold matches, gross profit, SG&A, so on and so forth, until I look at what happened in 2016. They had net income attributable to a non-controlling interest, which they never had again. But it highlights the fact, and this is why I asked you to bring in at least 2 different sets of statements, 2 different filings, that things are not always the same every year. Sometimes you'll see them actually change the name of a line item, or in this case have an extra or a missing line item. So I'm going to delete a row here so that things line up. Now, had that label been here and not here, it would be important to move that label over to retain the label. It's like I inserted the row in the wrong place, so I'll move it down from here. After I confirm that all my line items correctly reflect all the numbers for all the years, I can delete this column with a control minus, and then I can take the most recent data. Therefore, if I've got a more recent 2018 and 2017, then comes in the older filing that I needed to get 2016, I want to delete these 2 columns. Now, what I normally like to do is select those 2 cells and do a control space to select the entire column, but it selected all 3, and that's because this cell is merged. So I'll hit Control 1 and then go to the Alignment tab, and Alt M will unmerge those cells for me. Then I can come over, select 2, Control Space, Control Minus. We really don't need this line at all, but it was good to see why the merged cells are a problem. Control Minus and get rid of it all. Back cut, paste, Shift Space, Control Minus to clean that up. Now let's do the balance sheet. And what I see in the balance sheet is that in the more recent statement, there were some operating leases that were added that were not in the older statement. So we have them showing up under current asset. Well, have them showing up as an asset. We have them showing up as a liability, and both current and non-current. So what I want to do before I delete column E is copy these over. Confirm that the rest of the labels are okay. I would recommend taking note of the note 10 was for the 2018 filing, and note 9 was for the 2019 filing. I may be off a year on those, but you know what I mean. So now we can delete this column, and let's see how well these numbers compared. Looks like there were no difference in those numbers. So we'll delete these two columns with a control minus. And as much as we'd love to have a fourth year, as the assignment requires, Yeti just hasn't been public long enough, so we won't worry about it. Finally, let's do the statement of cash flows. I'm going to get rid of these merged cells first of all. Get rid of this top row. And compare the labels one by one. Notice this one really tripped me up. This year they called it additions of intangibles net. This year they called it purchases of intangibles net. But in 2017 it was 4926 in both cases. In the following year it was minus 11,027 in both cases. So this just takes a little bit of effort to go through and compare each sale and compare each item. I notice here that things are in a bit different order. There's a changes in revolving line of credit that comes before repayments of long-term debt. So I'm going to do a little bit of rearranging here. So I think if you back up the video and look at the clock, it took me some time to go through this, but I'm convinced that I lined up the line items well where there was a match, and I just left blanks where there was not a match. But then to double check, I went in and put this calculation that said compare the 2018 number to the 2018 number from each filing. Tell me if there's a difference by subtracting the two. And I got 0 in every one, so I feel pretty good about that matchup. I think in this video I've ended up defaulting to the labels provided with the older statements. It probably would have been a better idea to default to the labels from the latest statements. Nonetheless, I'll bet we get by. Now I can delete the column of labels, the blank column, and the two redundant columns, saving the more recent one in case there were any restatements. I got lucky on Yeti and there were no changed numbers from the older filing to the newer filing, but I know a lot of teams are seeing numbers change. We're going to write it off to restatements and not worry about it. And hopefully that gives you a little bit of help if you needed it in preparing your data to build a pro forma model. Thank you for watching.